Well, another busy morning as we here in Canada wonder about the possibility of Trump tariffs. Trump has also announced support for a major investment by Oracle, SoftBank, and OpenAI to build AI-focused data centers in the United States. It's just one of the stories that James Callahan is tracking. He's a portfolio manager at Barometer Capital Management, and he joins us here in studio. It's great to see you, James.
Great to see you too, John.
This is a very busy time for announcements, and the market is watching very closely, and it does key into some very important themes that make up the markets, like tech, which has all this growth, and AI specifically. So let's just start there. Even though there's worries about our trading relationship with the U.S., what did you make of this continued push for data centers built in America to fuel the AI boom?
So I think you're exactly right, John. It's tough not to feel like a cat chasing a laser pointer right now.
Yeah.
You know, there's so much in the news, of course, but it's great to see the wind at the back of the AI industry now in the U.S. And you know, we've kind of taken the view, let's sit back, we'll look at the whole field and see what is going to be important to the new president. And we can talk about some other themes later on, but it's nice to see overnight that AI now is a key theme. Maybe just to provide some context to the numbers that we saw, this is an extension of the already $100 billion announced by the SoftBank CEO during a Mar-a-Lago visit in December. And so the overall number announced will be $500 billion. What that looks like, we don't know, whether it will be $25 billion this year, $200 next year, whether it'll be $125 billion a year for 4 years. It's hard to say, so it's difficult to model, but what we do know is that when you sum CapEx expectations for the big cloud companies that are investing in AI, when you sum their CapEx expectations for this year, you get to about $250 billion, just to give an idea of the magnitude of that $500 billion number. Like, it's huge.
Yeah, I mean, my head is spinning with these numbers. I've basically lost count. The only one that I'm keeping in mind is Bloomberg has a team of technology analysts who have predicted that AI-related revenue, specifically from the generative AI theme, so all of the spending components that go into that, presumably some of this is that, will be north of $1.5 trillion in less than a decade.
Yeah.
And so I think those numbers have really caught the attention of investors and raised the question of how you should be investing given where we're going. And I know these stocks have had a big run-up, but so how are you thinking about investing tied to the AI boom?
Of course. So we have a name that we like. It's NVIDIA. It's been talked about,
Right,
ad nauseum, of course.
Yeah.
When you look at the partners that were on stage with President Trump yesterday, we didn't see the NVIDIA CEO there, but they are going to be the clear beneficiary of this. When you read the language that was in the press release of we're going to be investing money into compute power for AI, all of those dollars essentially are going to buy NVIDIA GPUs. And so while they weren't really explicitly mentioned, they weren't on stage, I think they're going to be the biggest beneficiary of all of this. And it's just another source of gigantic incremental demand that they've seen come so many times over the last 2 years. And so I go back to our strategy that strength begets strength. And that's what we're seeing with NVIDIA. It's a generational move, and we're happy to have caught it.
Yeah, it's amazing. And I over the last 6-8 months, there have been some really smart people who've made very smart cases for it's time to cash in on a stock like NVIDIA. I was looking at some of the estimates across the board on Wall Street just in the last couple of days, and I think this is the average, not like an outlier. Like there's analysts that would not be surprised to see revenue growth of like more than 100% over the next 3 years. So that's the exciting growth story. But I think this, even this deal particularly highlights another big theme area, which is the power needed for our AI future. So how are you thinking about the power ecosystem that is, which really is, it's not really around it, it's part of the story of the AI boom as well.
Exactly, it's intertwined. So this is something that we've thought a lot about over the last year. And kind of beginning of last year, mid-year, we spent a lot of time on nuclear. And so there were a lot of nuclear exposed names that we quite liked and worked quite well. And that they had their time in the sun, definitely. But what we saw from some of the announcements that hyperscalers made when they're going out to try and procure power is that the incremental nuclear likely won't be online until 2030 or post 2030. Like that's the date that Microsoft's deal with Constellation Energy restarts 3 Mile Island.
That was a big one, yeah.
When Meta put out their RFP for nuclear power, they want nuclear electrons by 2030. So what's going to bridge that gap between now and then? We think it comes primarily from gas. And so there are some exposures and names that we like through that vein that we can talk about that I think are perfectly positioned.
Okay, shoot, go for it.
Sure, so it's relevant, especially this morning, having just reported earnings, but GE Vernova. So this is the legacy.
It's the power component of what used to be part of the larger GE.
Exactly. So they spun out of GE Aerospace. Legacy GE split into 3 pieces.
Yeah.
Healthcare came out a little while ago. GE Vernova split from the aerospace business in March of last year and started trading under ticker GEV. And so what that business is comprised of are the natural gas turbine business, the nuclear turbine business that they bucket into a power segment. It also includes the windmill business, which hasn't been great, and that came through in some of the numbers this morning.
Yeah.
But I don't think many people own it for the wind business. The kicker is going to come from the natural gas turbine business, where they have more than double the install base of their closest competitor. They're just by far the leader. And we saw from CEO's comments this morning, they received in Q4 $9 billion of orders specifically for natural gas turbines to power data centers. So they're just going to work really well.
Okay, and I will add that there's a pretty strong belief on Wall Street that all of that momentum is going to help them with dividend growth too over the next few years. It's really been a standout name.
And management's clearly communicated that. They've been really good with the street. They've held 2 investor days in their short time being a public company. That's why earnings this morning were probably less consequential than they otherwise would be, is that they're coming off an investor day in December where they did give long-term targets.
Got it.
But to watch the trading, like they traded down 5.5% pre-market and are now, a bit positive. So
It's
good.
There's a lot of interest in these names, and we're going to take a break, James. Come back, talk a little bit more about that earnings theme. We had Netflix out with quarterly results today as well, and that stock popped. So more market coverage when we come back here on Morning Markets on BNN Bloomberg.